Thank you so much for having me today. I'm very excited to be talking about the health of the US social safety net today. This is a topic very near and dear to my heart. I do a lot of research in this area, especially on the value of these programs to households. Do households actually benefit from these programs relative to the cost? So what is a social safety net? These social safety net programs are government programs that attempt to provide help to households when economic hardship strikes. And this really forms a net of many different types of programs that try to provide this support to people. Some programs that you may have heard of before, like Social Security and Medicare, and many other smaller programs that try and address other types of hardships that households face during their life. Including, for example, rent assistance that tries to provide housing to households when they can't afford rent, and food stamps that tries to provide food to these families. So there's many programs that try and create this net to catch many of these households. So why do we need this social safety net? It's really because life is risky. All of us are going to face potential risks during our life. This could be from job loss, which your income could go to zero, you couldn't have your stable income anymore. This could be from poor health, where you have hospital bills that you need to pay. Especially here in the US, hospital bills can run in tens of thousands of dollars. This could put you into severe medical debt. And everyone is going to use the safety net to help insure themselves against this risk. We often think that the social safety net is just for very, very low income people in extreme poverty. But I can promise you that every single one of you are going to use a social safety net program at some point in your life. For example, all of you will probably use Social Security, receive retirement benefits from the government, and other programs throughout your life. Some of you may experience job loss, hopefully not, but we all rely on these social safety net programs. And so when these social safety net programs fail to provide these benefits when we need them most, then everyone is impacted by this. So we should really be concerned about the resiliency of these social safety nets. And so today I'm going to be getting into the design of these safety net programs and the current debate and looming issues surrounding this design. What are the threats to the resiliency of these programs in the future? And a vision for a functional safety net that includes both reforms to government programs and what private market can do to help support the safety net for individuals that fall through the cracks. So let's first talk about the design of these safety net programs. So these programs are designed to tax people when they're working, when they're well off, and then when they experience hardships and risks throughout their life, it attempts to pay out benefits to those households after those risks occur. So for example, if you experience job loss, unemployment insurance tries to provide benefits to you when you lose your job, and it taxes you when you are not unemployed. And these programs are designed to insure you against a wide variety of risks. For example, there's programs that insure you against job loss, such as unemployment insurance, as I mentioned. There's also disability insurance that tries to address whether you can work because of a disability or not, and tries to provide you money in the case where you're disabled. There's worker compensation if you have a temporary disability and that means you can't work. There's also a lot of other risks that it insures, such as old age costs through Social Security and long-term care if you need support during old age. There's healthcare costs from Medicare and Medicaid here in the US that provide healthcare to people that are elderly or low income. And there's even the cost of poverty. If you fall into poverty, there's programs that provide benefits like food stamps and rental assistance in those cases. And these are all designed to try and catch multiple different risks that people face during their life. So how do we evaluate whether these programs are worth it? We want to compare the costs of these programs to the benefits. So the benefits of these programs is that needy households get more value from cash than non-needy households. So if we transfer money to them, we improve society because they value this more than other people. On the cost side, the government must tax in order to fund these benefits, and these taxes create distortions in the economy. People work less, people distort other behavior, and this leads to costs that sometimes lead to greater costs than the benefits that they're provided. And so how are these programs designed? The evolution really started in the 1930s with the Great Depression, when there was extreme poverty in the economy. these were designed to really address the poverty of that age. The job losses that were occurring, people couldn't find their jobs. And during this New Deal, lots of these government programs were started to try and provide insurance to these households. It first started with Ida Fuller in 1940. She was an elderly lady who lived on some rural farm in Vermont, was born on that rural farm. She had no husband or kids, and so it was hard for her to support herself during retirement. And she worked for 3 years contributing to the Social Security program before she received these benefits. And she received these benefits for 35 years. So this was a great deal for her, for the Social Security program, only paying in for 3 years. And their first check was only $22, so a very, very small amount. And over the years, many, many more programs have been added to Social Security to contribute to the social safety net to protect these households. And today, this humble beginnings of a $22 check has expanded to $3.4 trillion per year in government spending. To fix ideas, this is 50% of all government spending is on social safety net programs. So you should really think of the government as basically a form of insurance for households, as providing this safety net. And the majority of these payments are in Social Security, which is $1.5 trillion per year, and Medicare and Medicaid, which is $1.5 trillion per year as well. And all of these costs are creating looming issues for the safety net. The first looming issues are regarding large reforms to these programs in recent years. The Trump administration has begun reforming a lot about the social safety net. So recently, the Trump administration cut food stamps benefits, just as grocery costs are rising. So many needy households need money to pay for these rising grocery store costs. They can't fund these. As well, the government cut benefits to Medicaid. They set work requirements for households that are going to eliminate healthcare for many, many workers that depend on these benefits to pay for healthcare costs. So over 12 million individuals are predicted to lose their health insurance in the coming years due to these cuts. And these types of cuts are well motivated because we have these rising costs in our economy, and especially from the risk of the elderly population coming up. Elderly people especially use the social safety net. They use programs like Social Security and Medicare, and these programs are very costly, as I mentioned. And the number of people that are old in our economy is just going to grow from here on out. In the 1950s, less than 10% of people were over the age of 65. And fast forward to the 2050s, this is going to be over 20% of people are over the age of 65. And the people over the age of 85 is also going to grow. These people are very expensive to take care of. They also take up Social Security benefits. They don't work to provide taxes to fund these programs. And this will put a lot of pressure on the social safety net going forward. This is especially true for Social Security. Here on this graph, I'm showing the trust fund funding for Social Security. This is the amount of money that Social Security has in reserve to pay for these programs. And I want you to focus in on this curve that is labeled Old Age and Survivors Insurance. This is the Social Security Trust Fund. And you can see it's going to run out before 2035. And what this means is that the government will have to cut benefits before 2035 for these elderly households. So once again, remember the story of Ida Fuller. She was this elderly woman who couldn't support herself. Without Social Security, she would be in extreme poverty. And so we could expect a lot of households will be forced into poverty if we indiscriminately cut Social Security because of this. Before 2035, if the government doesn't fund Social Security, benefits will be cut by 20% for these households. And really, you might think that the private market could step in to provide these benefits, but currently private markets cannot support the social safety net at the same scale, but there's a lot of opportunity and growth in this sector to support a better social safety net for these people. Currently, programs that are designed as income insurance, such as disability and unemployment insurance, are only $1 billion in revenue, which is a very, very small fraction of the government spending on these insurance programs. So I think there's a lot of opportunity to expand private market solutions to address these safety net issues that we face and these looming physical crises that we see for governments. And so what can we do to improve these safety nets? I've talked a lot about the US case today, but these issues apply to all safety nets across all countries. Countries across Europe and Asia are also aging, and we need some solutions to address this. So the first reform that I have is that we should keep benefits for the neediest individuals. So when we're cutting these programs, when we face these looming fiscal crises, we will have to address the costs, but we should keep in mind that these protect people from poverty. Recent estimates have shown that if we just indiscriminately cut these social safety net programs, this would double the poverty in the United States. So we should be very, very careful to design the social safety net to target benefits to these most needy individuals to protect them from poverty. A second reform is we need to raise taxes in order to pay for these benefits in the future. An example of this is the Social Security tax cap. Currently, if you have income above $176,000 per year, that income is not taxed for Social Security purposes. If we raise that cap, we can drastically improve the fiscal outlook for Social Security. I want you to focus on the red line here. This, once again, is the trust fund, as I talked about before. If we raise the Social Security tax cap, you can see that we can extend the solvency of Social Security until the 2070s, so much longer than we have today. The third reform is to fund research for innovating these programs. This is a shameless plug for funding research, especially economics research on these topics. And it's really because research can identify the inefficient costs in these programs. These government programs are large, they're over 100 years old, and there's tons of inefficiencies that we can address in them. For example, my advisor at Stanford studies these inefficiencies in the insurance programs of healthcare. And he found these hospitals that were costing the government $4 billion per year in costs and providing no benefits. So we can really fund research to discover these types of costs, these inefficiencies, that are basically billion-dollar bills lying on the sidewalk, that we can help to address, make these programs more efficient, and improve the cost of these programs. So what can a global private safety net do? I think there's three things that a private safety net can do to help buoy people who are being left out from these social safety net programs. First, I think it can step in where these safety nets are shrinking. We can expect these safety nets to shrink in almost all countries across the globe here in the coming years. I believe private market solutions have the potential to step in and provide more insurance to households who are going to fall through the cracks because of this. Second, there are many households that do not qualify for benefits because maybe they don't reside in a country for very long, maybe they're not in a particular state that provides these benefits. These global private safety nets can actually target these people and help support them and provide this insurance to them when they actually value it. And finally, I believe that private markets can innovate on a lot of these programs. These programs are around 85 to 100 years old. They're very, very old. They could deal with some innovation and improvements in the delivery of these programs, actually target people who have benefits from this, and make these programs more efficient. All right, thank you so much.
Thank you so much, Nick. That was really, really fantastic. And yeah, great to hear you present again in a non-classroom setting.
Thanks.
I think I want to start off our Q&A here with kind of following up on one of the points you made about the origins of the US social safety net. So you said it was designed in the 1930s to deal with the Great Depression and this kind of widespread poverty around the US. How do you think that design falls short specifically in today's world? And if you were to kind of redesign it for the US today, what parts would you emphasize or focus on?
Yeah, that's a great question. So really Social Security, when it was designed, there was so many less elderly people back then. And so it was much easier to fund the program back then. I think today there's a lot more elderly people that we're going to have to support in the future, and they have much higher costs as well. So I think the program needs to do a better job of targeting those households who actually need those benefits, and those households who don't, maybe providing a little bit less benefits to them. And so I think there's a lot of innovation that we can do in that respect. And what was the second half of your question?
Just if you were to kind of design it for today's world, what are the benefits that would need to be focused on? Is it still Social Security? Like, how would you kind of redesign it if the bureaucracy of today didn't exist?
That's a great question. I think there's a lot of risks that are coming up that these programs are not well designed to face. Risks such as like AI, I think there's going to be a lot of job loss in the future. I think climate change is another risk that these programs don't insure very well. So there's a lot of risks that we're going to face in the future that really weren't concerns in the 1930s and 40s. And I think we can do a much better job of designing other types of insurance against these types of risks we'll face.
Awesome. Yeah, the obligatory AI mentioned, we're going to have an amazing talk in about an hour about universal basic income for AI-driven job loss, so stick around for that. So something that we've been talking about a lot today is like global mobility, migration, people moving from one country to another, and I'm really curious, how does immigration impact social safety nets, both in the US and abroad? There's also been a lot of dialogue in the news about, oh, immigrants coming and putting pressure on our social safety nets. Is that really how it works, or can you talk a little bit about that?
Yeah, it's actually the opposite. A lot of immigrants that come to the US actually pay Social Security taxes and don't receive benefits from these programs. So actually cutting immigration is actually going to harm the physical outlook of these programs even more. I suspect that with this recent decrease in immigration, we can expect Social Security to run out even quicker than it already is. So there's a lot of worries that cutting this immigration is going to impact the solvency of these programs.
Why do you think, I mean, besides just kind of like xenophobia in general, why do you think that narrative is so prevalent, and what can like economists or policymakers do to emphasize the role of immigration in supporting our social programs?
Yeah, I think there's this stereotype that a lot of immigrants come to the US and sort of live off the safety net, but really a lot of immigrants come to work. And when they come to work, they do provide these tax benefits. And a lot of the time, they're working households. They're not these households that are elderly that are actually the main cost drivers in these safety net programs. So they can actually help provide these benefits to a lot of our elderly households in the future.
Yeah, it's super interesting and really important. I guess kind of like flipping that dynamic a bit, what happens when like somebody from the US leaves the country to go live somewhere else? Are they able to come back and like access the safety net benefits here? How do they participate in other safety nets? Like, what does that look like for expats?
Yeah, I think it's pretty difficult, I think, for expats to use the social safety net here, especially if it's a state level program. So if you immigrate to another country, you're probably not going to be eligible for unemployment insurance or workers' compensation in your state. So these people are going to fall through the cracks for a lot of these types of programs. So you're not going to have as generous insurance as someone living in the US. So I think there's a lot of opportunity to provide this type of insurance to these households that are falling through these cracks.
Yeah, that's really interesting. I guess kind of my last sort of question is like, do you have an example of like a really well-designed social insurance program, maybe in another country or even in the US, that you think like SafetyWing can take inspiration from, or that the US should use kind of as a mold for reforming our safety nets?
Yeah, that's a good question. I think a lot of the programs, some of the programs in Europe I think are well designed, some are not. I think the health insurance programs in Europe are much better designed than here in the US. I think we kind of have this hodgepodge of insurance in the US and healthcare that really drives up the cost of these things for people. But I think a lot of the Scandinavian countries have very generous income insurance programs that can actually be looked at as a model for the US. And I think they generate a lot of benefits for the people in those programs.
And do they still incentivize people to work? Or like, I guess that's the kind of main argument against them.
Yeah, I think the unemployment is definitely less incentives to work than the US. I think their disability insurance is definitely something to emulate here in the US. They have a very different government funding structure, very different taxes than here. But I think that they have a lot of lessons to take about how to support people and make sure that we reduce sort of the income inequality that we have here in the US.
Fantastic. Well, thank you so much. This has been such a fantastic talk, and I'm sure everyone in the audience has learned something and understands like the US system a little bit better. It's quite difficult, and you're spending your career doing it. But yeah, thank you so much for being here and sharing your knowledge with us. We're super grateful to have you.
Yeah, thank you for having me today.